Okay, so this is February 11th, 2021, and futures are pointing again to a higher open, even though we have a lot going on, starting with the second day of an impeachment trial for President Trump, and the some lawmakers, GOP lawmakers, said that the case is compelling. But to me, I don't understand the point of this impeachment, but it seems like a giant waste of time and money. But it's still going on, and frankly, Wall Street doesn't care about the impeachment trials or anything that's going on the Capitol Hill. Okay, so initial jobless claims came in actually higher than expected, and that's not good. That's not good news. But again, Wall Street doesn't care about that because as long as the jobless claims come in the vicinity of what's expected, Wall Street treats it as fine. It's like a non-event. Okay, so those two things going on, and also again the Reddit attack on the cannabis stocks happening as cannabis stocks are going through the roof, as again short sellers running for cover. But let's jump to SPY ETF or S&P 500, and SPY to me, I mean, it seems like it's going higher, but we have a long weekend. Basically, Monday is off, so I will be careful here because on Friday, people tend to before the long weekend, people tend to take some profits. So I would lighten up on some positions here, but in general, I mean, it's not looking bad. So SPY seems to be going higher, but I would lighten up on some positions, and QQQ the same thing. I mean, they're pretty much going in tandem, and QQQ. I mean, it's not overbought or anything, but before the long weekend, I would just lighten up a little bit because I'm just afraid that Friday could be some profit taking happening. Okay, so let's jump to stocks, and before we do that, if you want to see my trades on pretty much everyday basis, you can check out a link to my Patreon club in the description of this video, and drop me a like if you could, as it helps me with my YouTube it helps me with the YouTube algorithm. Okay, so let's jump to actually cannabis stocks, and some of the cannabis stocks, like in uh, pretty much not overbought, like heavy overbought territory, and like TLRY, and looks like it's coming down pre-market a little bit, but it was sitting like at 95, and I would just leave it alone and let it come down because it's just too fast, too high, too fast, and I would just leave it alone and let it come down to like I would say 30 level at least if you want to buy it, but I would actually I would rather buy it lower than that. And I'll give you a couple more names: ACB, Aurora Cannabis, and it's still a little bit lower, but not that much as as Tilray, as SNDL, SNDL. That stock is actually higher pre-market, and OGI. I mean, those are smaller stocks, cannabis stocks that are higher pre-market, but bigger stocks are starting to come down a little bit, and so I would be careful with them. As I mean, they tend to like GameStop and what AMC and AMC, they tend to go high and then fall hard. So be careful with them, and but still there's an interesting opportunity if they come down a little bit, maybe because the cannabis stocks can have a long run, but they need to come down. They need to have a base, some kind of a base, settle a little bit lower. Okay, so let's jump to Coty. Okay, so Coty, COTY, is a cosmetics company, and they reported quarterly profit of 17 cents, 10 cents above estimates. Revenue was in line, and Coty said that its profit got a boost from increased cost savings, even as demand was dented by pandemic, and shares were falling a little bit because they showed lower sales, but as you can see, there's a strong baseline for Coty shares. Okay, so I like that line because usually after this strong baseline, there could be a big jump higher, but who knows when that's gonna be. And so if you want to buy a Coty, just keep in mind that this could be a long-term hold, and but shares may eventually go higher. So I actually like Coty here in this area, and I would be interested in buying Coty here. CGC. Okay, another Canopy producer, Canopy Growth Corporation, actually reported smaller than expected loss for its fiscal third quarter as demand for its products increased, and said it expects profitability during second half of 2022. Um, uh, Decent report, but again, it's very overbought, just like other Canopy producers. So I would be careful with this. I would let it to come down, but a decent report in general for Canopy Growth, and I would be interested in buying shares in like low 40s at least. Okay, so if it comes down to low 40s, I would be interested. Okay, SPG. Simon Properties. Okay, Simon Properties forecast improved 2021 profit, and Simon seen a recovery by its retail tenants and improvement in its rent collection. So interesting trade for me for Simon Property. Again, it's overbought, and if it comes down to like low hundreds, I would be interesting to buy this. But Simon Property is the biggest mall operator in the U.S. and the strongest to me mall operator because the management is really good, very strong, and I think they're still paying dividend. And I think if it comes down a little bit, I would be interested to buy Simon Properties. Okay, HBI. Haynes Benz brands is one of my favorite companies. It's a apparel maker, athletic apparel maker. Beat estimates by 9 cents. Revenue beat as well, and it says that it continued momentum in U.S. and in international for its champion brand. So HBI, remember I told you long base, build up a long base and then a big jump. So I expect this to continue, and the shares came down yesterday, and I think this could be an opportunity to get into the stock. So I like the stock HBI, and I think it's going higher. Okay, GM. GM shares are lower today and yesterday after reporting earnings beating by 29 cents. Revenue beat as well, but issued a lower outlook due to ongoing shortages in semiconductor chips. And they said that they will have 2 billion loss in revenue this year because of the shortage in semiconductor chips. And shares took a dive and will probably be lower today, but in general, I think that the fact that they're going all electric in 2035, and the momentum for the stock is very. I mean, the demand for the stock is very high, and the momentum of the stock is going to be hard to stop. So I think it could be a good opportunity to get into the stock at these prices for GM, and I think eventually it will go higher. Okay, Twitter. Okay, Twitter reported really good earnings. Actually, shares jumped like 13% or 12%. I don't remember exactly, but after company beat by 7 cents, revenue was also above, but a user rate of 27% missed analyst estimates, and it warned that the growth would slow in upcoming quarters, and I actually think that the shares are way too high right now. RSI is like over 80, and I would be a seller of Twitter here. So I mean, if you were trying to buy, I would wait for a better opportunity. And I mean, the report was good, but it was not as good as the shares indicated. So I would be a seller of Twitter here. Okay. Lyft. So Lyft reported really good earnings. Actually, I like the earnings, and smaller than expected loss, and it said that it would become profitable by third quarter of this year. And actually, Uber as well reported earnings, and Uber reported not so good earnings. So between Uber and Lyft, I would choose Lyft. And I saw Gene Munster is the analyst that covers Uber and Lyft, and he said the same thing, that he prefers Lyft because Lyft doesn't have so many pieces as Uber, and it's more focused on their US operation. And Uber has too many pieces, and it's hard to manage. Okay, so I would be a buyer of Lyft and a seller of Uber. Okay, so Uber shares are lower, and they reported, I mean, they reported smaller than expected loss, but revenue were slightly below. But Lyft reported really good numbers, and actually said that profitability come in next second half of this year. So like I said, I would be a buyer of Lyft and not a buyer of Uber. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Tuesday probably.